afternoon, everybody. Welcome to Trader Merlin Show. It is your Tuesday edition, Taco Tuesday, Trivia Tuesday. Yes, up late last night doing some trivia rounds. I think I talked about in the past, like potentially bringing some of my trivia questions to you guys on a Wednesday after I do my Tuesday night trivia, of course. I had some fun rounds planned for this evening. Anyway, let's move on from that to what on earth is happening in our markets. Just beyond my comprehension, I'll tell you that. The moves today just didn't make much sense to me, but we'll look at that right now. We're going to start things off, though, with the oil woes continue. Now, for those who are regulars here, you know we've been looking at this crude oil chart right here, and I think it was actually back when we were at this peak right here in September. I believe that was the date that we did it from, or I did a poll asking, how many of you believe that we're going to be going to 100 by the end of the year? And I still think so, although the odds seem to be getting slimmer and slimmer and slimmer as we kept on selling off. And of course, over the last 14 days, just from this peak from October 20th, we're down over 14%. Actually, it's less than 14 days, excuse me. Let's go right there. So 12 trading sessions, we're down 14%. That's over 1% per day slide in crude oil, which has been great for those of us who are looking to fill up our gas-guzzling tanks. I don't drive a hybrid or electric vehicle, so give me straight petroleum. It's fantastic from that perspective. And also the fact we broke these lows right here going back to August 23rd and 24th. To me, pretty important. And it looks like this thing is now officially broken this short little run up. I thought we would hold. We got down to about 82, 81.50. I thought we'd stall. We didn't. Now it just keeps on sliding. So my odds of hitting that $100 target by the end of the year are slim to none at this point, barring some major conflict or issue flare-up with the Middle East, which could always happen. Now, I'm going to go to this graphic here and then go to the question that came in. It says, at what point will you buy oil? Looks like a buy now. I got to say no. I don't think it's a buy right now, Marcus. Look, I'm bullish on oil. I think long-term oil is going to continue to go up. You have statements being made by Russia and from Saudi Arabia about production cuts, and that should slow the supply and therefore drive prices up. Now, I think the real question that's going on right now is you have two different massive factors pushing crude oil. Number one is the tension between Israel and Palestine, the whole Hamas issue. Whatever your thoughts are on that, that's not what's driving oil. It's the conflict itself. Now, if that escalates and starts to get worse, which is where I've been kind of hanging my hat on, I just don't see a peaceful resolution here, and it feels like it's becoming more and more intense. I was expecting there to be a bigger flare-up from other parties outside of Israel and Palestine, namely Lebanon, Syria, Iran, all those other countries around Israel which have issues with Israel maybe when he's attacked. So I've really felt more bullish because of that. Now, there's another side to this, which I think is pretty critical, and that is demand destruction. So we have supply declines. Okay, fine. If you believe all the numbers that are coming out of, the Middle East, you have, and Saudi Arabia and Russia, you have supply declining, right? Well, what about demand? Obviously, when we look at any factor, whether it's going to be buying corn, wheat, soybeans, crude oil, avocados, it's got to be about supply and demand. So my thought was supply was going to become the big issue, demand remaining relatively constant. And maybe that's an oversight on my part, because if you look at the recent data that came out from China, let me bring up your Forex counter here so you guys can see the most recent data. This is the trade balance numbers that come out from China. Now, I, for one, am not a believer in data that is released by China. I think that, look, I don't trust U.S. data, so certainly not going to trust the data from China. However, it's what we're given. Now, if you look at this chart, you do notice something here. It seems like right at the beginning of the year, you get into March, it seems to always be this little trade deficit for them, meaning they imported more than they exported. What this shows you right now is that China is exporting more than they're importing, to the tune of, 405 billion? I don't know what that number is. It's a huge number. But notice it peaked here in March of 2023. We were at 825, and now we are at 405, which means that China is exporting less and less and less. For the previous month, we had exports decline in China 6.4%. Imports actually increased 3%. Now, that may on surface not seem like much of a big deal. What it does say is that China is slowing down on production. That usually means less demand for the goods coming from China, and of course, they produce most of the stuff in the world. So demand declining, demand destruction, I think, is that big piece that people are focusing on with crude oil right now. And boy, when you look at this price chart here, it does not feel like it's slowing down right now. Matter of fact, it almost looks like you're getting into a panic mode, one of those capitulation types of moments. So to go to your question, Marcus says, at what point will you look to buy, or what it says, at what point will you buy oil? Looks like a buy now. I don't agree with that it's a buy now. I think that's, this is not the time to buy it. However, there are some levels where I might take a shot at it. Does that mean I take a stab at it at 75? Do I take a stab at it at 69? I'm probably not going to go and just trade crude oil outright. I'll probably go into XLE, which has a similar picture, at least from the perspective of breaking lows. So, when I look at this picture of XLE, it's certainly rolling over. We're now making some new lows, although it's not convincing. I would look at levels maybe here. Let me put a couple lines on your screen here. That $81 mark becomes attractive to me. And as we get lower, there's another one that's a bit lower, which is right around $77. So those are the two levels that I'd be looking at right now as potential buy points for XLE, and thus crude oil as a proxy. Now, I know some of you would probably go straight to the futures, which is fine. You could do that as well. What I will probably do here, and I'll look at this over the next couple of days, if I get more declines in crude oil prices, then I'll probably look to be selling some puts at that $81 strike and maybe at the 77 if I can get enough premium, and keep that relatively short, right? Keep it out to maybe no more than 30 days. Obviously, the November 17th is coming up next week, so that would be a very short-term option there. But all in all, I'm fine owning crude oil long in the long term, but I need to find a more attractive price. Yeah, Sly Dog says, do you stick to the spiders? I do. Actually, you notice on my watch list here, it's just because they're typically the most liquid. That's really the only reason, Sly. I don't really care what fund family it is, what the ETF owner is, whether it's Goldman Sachs or Bank of, I could care less. What I want is the ones that are the most liquid, that represent a specific market segment, meaning the ones that have the most trading activity. And most of the time, it's the spiders. The spiders tend to be very, very liquid. So for those who may not know what we're talking about, they call them SPDRs, which the acronym is for spiders. And that typically represents these, when they have an X in front of it, that's usually the spiders. That means that they're put out there by that specific fund family. So when I look at XLV, XLF, XLI, XLU, all those ones with the X are the spider family. So yes, I do stick to the spiders. Good question. And there is no real rhyme or reason other than they're typically the most liquid ones out there. All right. So yeah, I definitely am watching this XLE fall. I think that it has the potential to get down to some of those lower levels. And, long term, we're still going to use oil. I was debating writing an article. I have to work on my article for this week. Is there a topic that you guys are interested in? Let me know. Maybe I'll make that my article for bar chart. So if you have an article topic you think is interesting, type it in a chat or email me at TraderMerlin@gmail.com. Sometimes I run out of ideas on what to write about for bar chart. One of my thoughts was, we talked about it in the past, which was, with all these electric vehicles and the push by Biden and his administration to push towards electric vehicles, great. I like the idea, but you have to have the infrastructure in place. And I'm seeing so many funny videos of people who have, Teslas, and they're just waiting at these charging stations for hours trying to get their car filled or car charged up. I think that's going to be a big piece that impacts Tesla and electric vehicle sales. The infrastructure is just not there. There need to be massive improvements to the electrical grid and et cetera. So maybe I'll do something on that. Other than that, I think energy will be fine. I don't think it's like eating into crude oil. Like, it's not going to just all of a sudden crude oil is done and, no more crude oil, everybody. We're still going to be addicted to crude oil for a long, long time. So look to buy those pullbacks. Spiders are more liquid than the iShares. It depends on which one, Manatee. Not all of them, right? Not all of them are as liquid. Some are. What you can easily do is, bring up, I guess I took volume off my chart. I wonder if it'll even let me. I don't pay for the subscription account here, so let me get rid of Bollinger Bands since I don't need them and don't use them. Let me add on an indicator here because I do like volume. And we'll put volume at the bottom. Click OK. Good, let me edit it. So, you look at the XLE spiders, you're talking 23 million shares traded today. Plenty liquid. Now, if you look at USO, my only issue with USO is it's not the liquidity. You had 7.36 million today. It looks like the average, 1 second. Let me get rid of that. Looks like the average volume where my cursor is right around, 3 to 4 million a day. Plenty. iShares definitely has liquidity, but not all of them are saying, hey, Les, thank you very much, my friend. I appreciate it. If I was drinking something better, I would cheers you. It's just water today. Hydrated, got to stay healthy for my trivia night tonight. XLE December 8th, 80 puts are about 70 cents. So December 8th puts, which is what? That's a month. So I'd be getting just slightly under 1% for the month. Not bad. Let me bring up that XLE chart again. Would I like to be an owner at 80? I gotta say, I think I'd be fine owning at 80. I really think I'd be okay owning at 80. And if we do a little, thank you for the bringing that up, Ben. Big M. If you look out here, let's go to December 8th. There it is. So what that means is that crude oil would have to drop 4.5%. In the next 22 trading sessions to get down to $80, which honestly, that could happen at any moment. I mean, XLE was down, 2% today. Crude oil was down over 4% today. So it could definitely happen. What I like about that $80 strike, Big Eb, is it's actually below this area of demand. So I would anticipate that area of demand holding right around 81. Therefore, fine. I'd be good at the 80s. I might actually go for that one. I'm going to wait and see what happens tomorrow. Maybe we'll get another down day on this one and see if we can get maybe a little bit more premium. But I'm okay with that. And I know some people might not be enough reward for you. But in my 1% account, sure. I got no problem with that one. I always had like to get over 1%. That's my goal. So Marcus, at what point when I look to buy oil? I think we just covered that one. That would probably be my price targets there, but I'll wait until tomorrow and see obviously wait till tomorrow because markets are closed, but see what we can get out of that one and maybe get a little more premium for tomorrow. I'll let you know, keep you updated, but I definitely am looking at it, Marcus, but I don't think right now is the buy point. I think if you look at this chart, buying right now, we've just gone below these recent areas of demand. I think now price is going to seek out a new area of demand, which might cause me to wait a few days. And, if we get down to the 81 mark, okay, great, I'll go sell those 77s and probably get great premium because people are panicking. That's the easy way to look at it. So I definitely think that this is a tough point for crude oil and for energy, but long term, I'm bullish. It'll come back, and I just need to find that right buy point. What are your thoughts on XLU? Well, I wrote an article a while back on XLU on why I was bullish on utilities. And here is the utilities chart. I forget exactly when that article was written, but I think it was actually like October 2nd was when I released that one. I was right as this thing was just falling. I'd sold some puts on it, hoping to get executed because I really felt that utilities were due for a big bounce. I thought this was kind of a crazy sell-off. Long term, I'm bullish on utilities. It's not recession proof, but it will typically do better during a recession because who's going to cut back their electricity? Now, I say this kind of in jest because I'm a dork, guys. I am a total nerd. I am the guy, and I'm wondering how many of you do this. Let me finish this whole thing out, and then you tell me you do this or you don't do this. I get my electrical bill here in Southern California, and I don't know how the exact numbers here in front of me, but if I use my electricity between 9 p.m. and like 10 a.m., it's 25 cents a kilowatt hour. If I use it between 11 and 4, it's like 30 cents a kilowatt hour. And if I use it between 4 p.m. and 9 p.m., it's like 60 cents a kilowatt hour. It's like almost triple the price. Maybe not triple. It's well over double the price if you use electricity between 4 and 9 p.m. here in my area of Southern California. So I'm the kind of guy, like when I need to do my dishes, run my dishwasher, or use any sort of electricity type stuff, I generally try not to do anything between the times of 4 and 9 p.m. because I know it's costing me so much more. That's the level of miserness that I fall into. How many of you consciously think about running your appliances, doing your laundry at certain windows of time because you know it's so much cheaper to do that? Anybody there? Am I just the outlier weirdo? I'm telling you, Naum, go solar. I'm telling you, Naum, I notice it. When I actually made a conscious change that, let's not do my laundry at 5 p.m. Do it at 9:30, right? Am I the only one? That's California. Here in Texas, we don't have that change in price. Here the customer is locked 24/7. Oh, nice. That's good. Yep, and when it gets dark sooner, the price increases. And great. Laundry starts before the market opens. I'm good. Yeah, well, I can good. I don't feel alone in this one. I used to drive midnight. I think it's funny that I have to do that, but when your electric bill is like $250, and then when you pay attention to it, your electric bill drops to like $175. I save $75 a month just by moving my my consumption patterns around. I think it's a significant difference. Yeah, check it out, Jarrell. Might be surprised. I do laundry in the off hours. Yeah, so there's peak hours, there's off peak, and then I think it's called ultra or super off peak hours here in Southern California. We change it to the all day rates. Oh, cool. I actually like it now. It's funny because last night is a good example. I had laundry to do, right? And my laundry machine was all loaded up and ready to go, but I waited till 9:30 to start it. It was done by 10, dried by 11, done. There you go. I know, I'm weird. Chalk it up to me being a weirdo. Cool, guys. You know what? If anything, I love this show because I hope I convey some of my experiences and knowledge which may help you, but I think on the other side, you might learn some things you just never know. Or a $600, monthly water bill? That's a tough one. Yeah, you're lucky, Lori. You're lucky the price is the same for you all day. And I'm sure it's going to be different in different parts of the country. In California, we have, our electrical grid is stressed. It's interesting. I would think that actually Texas might start to have some issues like that as well because of all the Bitcoin miners going on, stressing the grid. But I don't know. Check it out and let me know what you guys see. At least look and see what the difference is so that you guys know. The water rates are ridiculous. Yes, I know. You know what? It's funny. I've got a nice lawn out front, and I think I'm just going to rip it out. I'm going to just rip it out. I have Manatee. I have an on-demand water heater. I don't have a water heater that's running all day, so it's only when I turn it on. So, I don't take a shower or bathe between 4 p.m. and 9 p.m. It's always, in the mornings or when I go to bed. I'm a clock watcher. Hey, if you look at everything in our life that we spend money on, it's really funny. I went shopping with my girlfriend for groceries yesterday, and again, we have this competition where we go to Vaughn's down here. And I don't know if you guys know this, but your grocery store may have something similar. If you use your phone number, you're part of some club, right? Well, Vaughn's has an app that if you use this app, and you have to check out with the app, you can't put your phone number in, you literally have to scan the app QR code. There's deals in there that are unbelievable, and you can get huge discounts. So, for example, there's a thing called Deals for You. So she went through last night and she hit a button and collected a reward that said, you get $20 off your grocery bill if you spend $50. Are you kidding me? You just got a 40% savings on your grocery bill for literally clicking a button and paying attention to the app. So when we left the store yesterday, she had saved 56% on her groceries and I saved 42% on my groceries. Think about that, guys. If you go to the grocery store and you save even 30% on your groceries every time you go, that's going to add up massively over time. Anyway, I'll leave it alone. I did that in City of San Diego, gave me a couple of $1,000 in rebates for tearing out the turf. Yeah, I might have to do that. I love the lawn, but it's just such a pain in the butt to maintain, and yeah. Okay, so let me go in. I got you guys all fired up with the app thing. Merlin, can you change yours from time of use to all-day rates? Check the rates. I think I can, but I think the way I have it set up, I can actually save more because I'm doing almost all my consumption at off-peak hours, right? Like this right now. If I move my show to 4 p.m., guys, it's going to cost me another couple bucks to do it. I'm not doing it. Kidding. All right, let me go to another couple things that are of interest. So I will go into the markets, but I wanted to bring something up here because, you guys know I've got a little bit of bearishness, and I keep looking at the overall economic data, and my mind keeps thinking that we have some problems ahead. As you might recall, a couple months ago, I think it was October, they took away the pause on student loan debt payments, which could be a significant thing. I think that was the federal loan payment pause. It ended in October. So now all of a sudden, all these people are back on track. They got to make payments. I thought it was interesting when you look at this right here. This is new data that just came out. U.S. credit card debt in the United States for the second consecutive quarter is over $1 trillion. And look at the trend. I mean, the trend is clearly to the upside. Ever since COVID hit, we've been on this spending spree. You know, we've gone from 780 trillion to now over 1 trillion, or sorry, 780 billion to $1 trillion plus, and that trend doesn't look like it's going to stop. Now, here's where it gets interesting, and I think that America is in a difficult spot, very problematic. It's one thing if we have debt increasing, right? Of course, a lot of that may be people who are making student loan payments and had a pause, and all of a sudden they had some more money. Now, all of a sudden, from October on, they have had to pay those bills. And maybe there's a shortfall now because they're used to spending that money that they were supposed to pay for college loans. Now they're spending on other stuff, and they've become used to that. Now there's a deficit in their accounts. If you look at the credit card rates, so you've got this surge here. So not only are people using more, typically when you guys have bad credit, or when we have bad credit, the rates get higher, or when there's problems, rates get higher. Look what's happened to credit card annual percentage rates. So this is the average for them across the U.S. right now, according to, I think this is from Bankrate. It's one of the highest it's ever been. The average right now is running around 20.8% for credit cards. And that giant increase that you see just in the last year, you know, that's going to have a significant impact on people, massive impact on people, because they're taking on more debt because they can't pay their way through their normal consumption and living. And all of a sudden, the interest that they're paying on those loans or those credit card debts is getting higher and higher and higher. I think that this is a story that's going to get uglier and uglier and uglier going forward. I really don't. No, it's kind of scary. Let me see what does not Pepe say. But Merlin, if inflation is high, prices are high, and if people keep buying at the same pace, credit card debt is going to increase by default. Yes, you are right. Yes, by default, it should increase. But also, you know, there should be a point where we spend a little bit less. You got to know, if you're running balances on your credit cards, you got to know that you're spending too much. Another statistic I heard today, which is just jaw-dropping, was from Lending Club. Let me see if I can... I'll just ask you guys, and you can type it in the chat. What percentage of U.S. adults are living paycheck to paycheck? All right, just type in what percentage you guys think. This one's going to blow your mind. This is from Lending Club. What percentage of adults, meaning 18 and over, in the United States are living paycheck to paycheck? Meaning, if that paycheck doesn't come on time, I don't pay my bills, and I'm in a bad spot. What percentage of American workers are in that situation right now? This is going to be one of those ones that blows your mind. I'd love to see the data. I'd love to see the stats on this one, but I'm curious to see what you guys think. GS says 66. John says 95%. You're a pessimist, John. I got 40%, 60, 75, 80. So you guys you're pretty darn close. It's actually 62%. Now, some of you put in some numbers there that were much worse, but I think we'd all agree that if 62% of Americans are living paycheck to paycheck, that is a dire economy. I mean, that is not robust. That means we're in deep doo-doo, you know? That scares me. Yeah. Well, honestly, if you asked me that poll, I would have probably said, 40%. I wouldn't think it's that much. Like, come on, man, have some financial responsibility, save a little bit, get a second job, do what you got to do. 62%, according to Lending Club. It is, Thomasina, it is really sad. Like, whoa. I have worked my backside off, and I'm sure many of you do as well, to make sure that I know that every month there's money in my bank account. So even if I hit the skids and things go really bad for me, knock on wood, I'll be able to make it for a long time without, needing to live paycheck to paycheck. Yay for the 60s here. Yeah, I don't know, just kind of frightens me. That's one of the things I really, people need to watch Dave Ramsey after watching your shows. Yeah, or I just need to finish my book that is very much in line with what Dave Ramsey talks about, but I disagree with Dave Ramsey on several key points. I think there's some things that he does that in my mind are wrong. But again, I think he and I would both agree that the understanding of personal finance, personal wealth management, and financial independence in America is woefully poor. Very, very, very poor. Yep, people definitely need to have a budget. You've got to know if you have more money going out than you do coming in, which is a simple calculation, you're in trouble. Period. and many people working 2 jobs now to make ends meet. I agree, Lori, and that's a strange one. No one have learned from what happened in 08, or maybe even 2000 for that matter. Okay, let me. I'm going to run through the markets, and then I have one more thing I want to. Peter asked a question here about scanning, which I want to get to. So, Peter, I got your question coming up here. Just hold on a second. Let's work our way from the bottom to the top. Obviously, we talked about crude oil, which was in bad shape today. Let me zoom in here just a little bit and get on to crude oil. We've already talked about this one enough. I don't need to talk about it anymore. I am looking to buy crude oil, but not at this level. I need to go lower. I need to go lower just to make sure I don't try to catch this falling knife right now, because it could definitely go much lower. If we do go into recession, that could be dangerous. All right, let's go to our 10-year, which rolled over. You can see right now it's down 0.04%, but on the day, if we go from that point to there, you have the 10-year down 1.59%. Now, in the grand scheme of things, for anybody who's looking to buy a home, you're hoping that this drops. The more this drops, the more the market's going to rally, the better it is for real estate, the better it'll be for the overall economy. You want to see this 10-year decline. I'm not buying it. We've talked to this until too many ends on why I think that this is going to go higher. Main reason is the Fed and the Treasury and government spending. So I think that this is a short-lived little pullback here. Even though we're not really in an area of demand, I just don't see it going down much further than current levels on the 10-year. You know, do we get down to this 4.1%? I don't think so. Not right now, anyway. Gold. I got smoked today on gold and silver. Silver was really getting slaughtered today. Gold is down 0.76% to 1973 on the futures. You know, I was liking this because it felt like it was holding. We didn't have any profit taking. Well, today was not a good moment for gold because of how low it went. It actually broke the previous low, which is over here on October 24th. The good news is we didn't close outside those lows, so still holding, but not a great day for gold. Moving on to the Russell, which is down 0.32%. You know, after that giant rally up in overhead supply, it was kind of expected there was going to be a pullback. I just didn't get it with NASDAQ, which is the one that I was trading and took some more hits on. NASDAQ's been my nemesis this week, I tell you. Dollar index down 0.23%, or sorry, up 0.23%. We tiptoed across that yellow line there, which was a point that I've been using as a reference to an uh-oh level, meaning, this looks pretty bad from a breaking that perspective. Bounce right back up above it. So at this point, I just have to wait and see what the dollar tells me. It felt like it was going to break lower. I drew this line at 104.50 on the dollar index, which of course would have been a good catalyst for upside move in our equity markets. All in all, nothing really here to speak of other than some resilience in the dollar the past couple of days. All right, it's podium time. S&P 500 was up 0.27% on the day. Notice where we're coming into, folks. You know, you could draw supply zones all over the place here. Depends where you want to draw them. Right now, some people might draw it right there. I'll draw this over here to there. Right, some people might draw there. I know some others, you might just draw it to here. Bottom line is we're coming right into one. Right into that overhead supply zone on the S&P 500. So while this rally has been phenomenal, you've had 1, 2, 3, 4, 5, 6, 7 days in a row of just up for the S&P. If it's going to stall, it's going to stall between where it's at. Let's see. It'll stall between 44.01 and 44.30. So keep your eye tomorrow. If you see it rally up, fine. But if it starts to reverse and break these lows, then you got some nice short opportunity in your hands. NASDAQ, on the other hand, it is also coming up into an area of supply. If you're using, draw some zones on here, not really zones, but just an area, right? You're right in the middle of it right now for the NASDAQ 100. You know, a couple days ago, we weren't even close to these trend lines. Now on the NASDAQ 100 futures, if you go tip to tip, you've got your third point for confirmation. You're in the middle of that supply zone. And the odds seem to be getting better and better for a pullback, but man, unbelievable resilience for the NASDAQ 100. Just incredible how it's moving up. Crypto, your leader for today, 2.34%. Luckily for me, this offset, my losses I took on the NQs and my silver. It was not a good day for those ones, but I'm not too worried about my silver. That's a long-term play. All in all, looking great for Bitcoin right now on the futures, 36,145. If we look down here, the spot price, which I think is a better measurement, we're at 25,346, right? So it's come back a little bit. Futures market yet to roll over, so we're seeing that little pause right there. But all in all, I feel pretty good that Bitcoin has not had really a pullback here. Notice it's been just slowly drifting higher and higher and higher. Again, I think that any day now, that spot Bitcoin ETF is going to come through. Bitcoin to the moon. Well, let's just keep trending up. Let's keep trending up, Bitcoin. It's not just Bitcoin. There's a couple others in here that really have been big ones for me, and that was Solana. Really has been just phenomenal the past couple months for my account. I have a decent size of Solana, and Chainlink as well has done really well. So, yes. Oh, XRP. Yeah, XRP, you know, I'm not that bullish on XRP. I just think that they lost their advantage, and I still think that they have some issues to get past with regulators, although they seem to be doing better against the SEC. It seems like victory, victory, victory. Well, Ripple's had some pretty great moves up, and I still hold my Ripple, but I'm not adding to my Ripple position. So there you go. Eric says, Merlin, would it be valid to draw supplier demand for the larger time frames with simple one line in areas where price head swings? You know, that's an old question of semantics. So when you draw one line, you're saying support or resistance. It supports here or it resists up here. And that's the way I look at it. And I don't think that when you look at support or resistance as one line, price never turns on a line. It never turns on a line. I mean, if you try to pick the exact number, good luck to you. It's probably never going to happen. Very rarely. The whole supply and demand concept just simply takes support and resistance and says it's an area, it's a zone, and where might that area be? And I think that's more valid on any time frame. So I personally don't just draw one line. Typically, when I do it just for the show, it's because of speed. I'm doing it to make it, quick reference for you guys. But typically, I draw zones. Little yellow boxes is what I do to kind of say, okay, in this area, I expect it to turn. And based off of how it turned out of those areas, that's what will help me determine which order type I need to use and when I need to buy it. And more importantly, what's my stop loss on that one? Yeah, Big Ab, right? It's 100% it's the last 6 months. Loving Solana. Looking great. Was big one of correction, so I shoulda, coulda, woulda, Lori. Shoulda, coulda, woulda. All right, let me get to this last question here. I'm going to not do an hour plus show today as I did yesterday, so I'm getting back some of my time. Peter asked me this one. He says, on a prior show, you mentioned that you scan charts looking for clues about stocks that may be setting up for a profit opportunity, long or short, based on candlestick patterns. Which tools are you using to do this candlestick pattern scans? All right, so it depends on how much money you want to spend. If you're like me and you're cheap and you want to do it for free, here's a couple different ways. I used TradeStation for many years. I hope that TradeStation doesn't listen to the show. I hope that they don't hear what I'm about to say. Maybe I should just turn it off and not stream for a couple minutes, because TradeStation used to charge you monthly fees for their software. And they were a pain in the butt to deal with from a customer perspective. They put all these requirements on you, and it was just kind of, I don't know. I felt like they were just not good from a customer service perspective. Their platform is phenomenal, but it's way too confusing for the average trader. But I've used it for years, so I know it intimately. They have one of the best scanners and filters out there. I love their radar screener. It's one of my favorite tools to use. However, I don't want to pay for it. And I closed all my accounts at TradeStation. I pulled all my money out of TradeStation, so I have not one penny there, and they haven't cut off my TradeStation login. So, don't tell anybody at TradeStation. So I'll show you that filter, and here you go. I'll bring it over here. So this is my typical layout, right? If I have one screen, I just got the security I want to look at on the left-hand side, and I have my watch list on the right-hand side. And let me make this watch list bigger so you guys can see. Actually, I'll just scroll over here so you guys can see. Down at the bottom, I have a couple different watch lists. So I have my top 7, which I don't even use this anymore because I don't pay subscriptions to the data feeds. This is the S&P 500. But what I've done is I've stripped out all of the low volume securities. And some of these this is so old, a lot of these have just disappeared. Look at all these symbols that are gone. So it was the S&P 500, now it's the S&P 383. I could probably refine it down even more. So what I did is I went in and added a couple filters in this watch list. So I've got all the ones in this watch list. I took the S&P 500 and I whittled it down for volume. I said, give me everything in there that's over 2 million. And let me check, and I'll show you right now how to do that. So let me just go in here, add analysis technique, and I will go into volume average, VOL, and there's a average right there. Okay, I add that in, and now it's loading up the average volume. And that's going to be for, I think that's like the last 20 days. So I'm just going to double click this, and I'm going to show all the little stuff up at the top. So you see there's a whole bunch that are going to get removed right now. AutoZone, a lot of stuff's going to get cut. So let me take all these out, and I'll go to the OTA recommended. We'll go, it was 1.5 million, I think is their number. So I'll do 1.5. There we go. And I delete those. So now the S&P 500 is actually the S&P 265. And all that is those are 265 companies which have a lot of volume. There's liquidity. I need that for my trading. That's just one of my fundamental rules. I don't pay any fees. Oh, cool, good. Maybe they stopped doing it. It's been so long since I've actually used them. So now what I'll do is I've got these symbols here, and I've added in a screener right here that says, oh, where did it go? All right, Merlin, come on. I'll take out the average volume since I'm done with that. And there's my hammer formation. Okay. So here's hammer. I just double click on the hammer piece, move it up to the top. And you can see there's 3 different companies right now that have hammer formations. CNP, right, which is Center Point Energy. And you see a nice little hammer right here at the end of the day. Let me get here. So you have a hammer on this. Not a great one. It's been a little slide over here. So little hammer on that one. Fortinet. I am still long Fortinet. You got a nice hammer formation today, although it's not at the bottom of a downtrend. So I like that. Right, there you go. Got hammer on Fortinet. And then UPS also has a little tiny hammer, but not really that significant. So none of these really are anything that important. I also look at shooting stars. So there's no shooting stars today. Bullish Harami formations. Right, I have Illumina, which has a bullish Harami. APTV. I kind of like APTV. The other ones I don't like, so I might watch APTV just because it's been on an aggressive downslide. You have a green candle after a pretty sharp gap down. I might like that one. I'm going to keep an eye on that bad boy. That's the bullish Harami. I have bearish Haramis as well. You see we have ES, which is going to be Eversource Energy. Don't like that one. Even though they call it a Harami, doesn't work. Molson Coors. Nothing. And then KMB, Kimberly Clark, nothing there. So that's one way that I scan for them. I like this when I do it every single day. I usually do it a little bit later on in the day, in the evening. There's also another one out here called Stock Fetcher. Eric, I do my analysis. It's kind of funny. I do my analysis and filtering on TradeStation. A lot of my analysis is just TradingView, and then I use... now it's Charles Schwab. So it used to be Ameritrade and Thinkorswim. Charles Schwab, I use E-Trade. So I used to pretty much use all those big ones. A Ninja Trader account, but I don't really use them too much. Yeah, pretty much the main retail brokerage firms. Free commissions. I had a MetaTrader 4 account, but predominantly just sticking with their main retail stuff. Easy. So if you go to Stock Fetcher, right at their front page, I think it's their front page. Let me click on their front page real quick. This one's not as good. I don't like it as much, but there are some opportunities here for those of you who want to do things for free. You notice under quick examples here, there's a little drop down and it says candlesticks. And by the way, you have all sorts of other cool things here. So if you want to see, overbought or oversold on MACDs or moving average, RSI, there's all kinds of different stuff there that you can use. You go to candlesticks here and you can see dark cloud cover, evening stars, here's hammer. And then it just gives you 5. If you don't pay, you get 5 of them. Okay, fine. What I notice here is I go view full results. And of course, this is because they want to charge you. So here's those 5, all right? It only gives you 5 at a time. However, some of these I'm not going to work with. I don't like trading stocks. You can see up here it says close is above $5. No, how about a close above 25? I don't like cheap penny stocks. And I want something that has 1.25 million volume. So I modified those. This is the code that it's searching for. I hit fetch stocks. And now it just has JEPI. What's interesting is, JEPI did not show up on the previous one. Let's go look at JEPI over here. I don't really see it. It's actually doing as of yesterday. It called that a hammer yesterday, which that's not a hammer. That's actually what's called a hanging man. All right, you guys know the difference. I'll just explain it to you. I'll cover it right there. The candlestick that you're seeing on the hard right edge, this guy right here, That's a hanging man because it's after a long run up, not a long run up, but it's after a run up in price. I get the big run up in price. There you go. So Stock Fetcher doesn't do the best work as far as filtering. Another one that I think might be beneficial, and I've shown this one to you guys before, is FinViz. And there's a ton of different ones out there. Again, these are not the best of the best. They're just things that I've used over the years. If I go to FinViz, let me turn this to the light theme. And you'll notice there's a lot of different charting pieces here. I like this because it may give you some ideas. And if you pay for the paid version, you can do a lot more refining than I can. But you notice over here you've got ascending triangles, descending triangles, head and shoulders, double bottoms, double tops, channel up, channel down, channel sideways. All of these represent potential opportunities. So, for example, I know Tom, he loves spreads, loves to trade spreads. Okay, great. You could just pick on this channel piece right here, and there may be some opportunities that you see. This CVEO looks like it's bouncing between 19 and 22 bucks. It's been doing that since March of this year. All right, well, maybe there's opportunity there. Some of these absolutely not. This historical, this is a Treasury bills, I believe. So this is going to have this same pattern over and over and over again, which I guess you technically could trade that if you want. Don Fron uses Robinhood to buy crypto. What do you think of that versus Coinbase Pro? I'm kind of an anti-Robinhood person. When Robinhood started, you could not move your crypto off the exchange. I believe that has changed now. I'm sure some of you know better than I do. I don't even look at Robinhood. It's not even on my radar. If you're using it as a platform to buy, let me real quickly just look here. Like I said, I have not looked at Robinhood or crypto or anything else because I just don't use Robinhood. Let me see if I may even have an account. Maybe I can log in and I can maybe give an example as to why you don't want to use Robinhood. I think it actually had my login. Oh, great. I have to verify my ID. Bear with me just a second here as I get this thing sent over. Hopefully it'll pop up in just a second. Do not share. Never share this with anybody. All right, my code is... not going to tell you. Okay. So apparently I do have a Robinhood account, and I'll log in here real quick. Welcome back. Thank you. Good to be here. I'm here all night. Add funds. Continue Robinhood. All right, let me see. Crypto. All right, so let's say I decide to go buy some Bitcoin. 35,488. Well, what's it trading at like Coinbase? I'm going to put this on two separate monitors so I can real quickly switch back and forth between the two of them. And I'll show you on the advanced platform here on, give me just a second here as I get to the advanced. I got Bitcoin, and we'll change this from render to BTC. Okay. So right now, you can see it says 35,000. I'm on the right-hand side, 35,493. And if I switch over here, I can buy it right now at 35,369. So I can save myself $130 per Bitcoin if I buy it on Coinbase. My answer is simple. Don't use Robinhood. There you go. There, solved. If you can move it, maybe it's worth it. But if it's like TradeStation also said that you couldn't move it. And that was stupid to me early on. If you can't move it from a location, don't do it. Now, even things like PayPal, Venmo was locked. Now you can move it, but Venmo charges you a pretty good, 1% plus fee, 1.5% fee. Is the purpose for your Robinhood account to purchase your Merlin coins? No, I own them all. Dave, I own all the Merlin coins. It's mine. But certainly shop around. What I just showed you there very quickly was, Robinhood is charging literally $130 more per Bitcoin. It doesn't seem like a lot. But when Robinhood says, you're not paying a commission, it's free. BS. They're doing that. They're widening the spread on you. Sometimes it's better to pay a $2 commission or $5 commission and save yourself $130 per Bitcoin or $140 per Bitcoin. All right. Let me go to your calendar for mañana. We are starting to have some better economic news, at least driving things and exciting stuff happening this week. So here is what's going on for tomorrow, November 8th, Wednesday, 6:15 a.m. Dun, 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 dun. Jerome Powell will be speaking. And man, I think my clock is wrong again. Match automatically. Let me just make my time zone set to Alaska. Isn't that special? Let's not make it Alaska. Let's go Pacific time. Save. Okay. So here we are, 2:46. Perfect. Let me get rid of that. And Jerome Powell will be speaking mañana. And as you can see here on your Wednesday calendar, it is going to be at 6. Oh, it is 6:15. Okay. 6:15 Pacific time. So 15 minutes before the market opens, you may get some really weird action and price volatility. That's probably Jerome Powell speaking. Other than that, you've got 3 other FOMC members speaking from 10:40 on. You've got Williams, Barr, and Jefferson. So it is a very big day for announcements or just speeches and talks from these FOMC members. Be careful. Volatility could be pretty high. You also have retail sales numbers coming out for Europe. The U.S. has final wholesale inventories. And as Bill Addis talked about last week, we have that 10-year bond auction. Keep your eye on this 10-year bond auction, folks. It's, depending on what happens there, it can have huge implications for the bonds. And that, of course, means big moves for the equity market. So if all of a sudden things start to go wonky around 10 o'clock tomorrow Pacific time, you may know why. That's probably the bond market. So that's your economic calendar for tomorrow. As far as the earnings front goes, let me bring up your earnings calendar here, which I did not have prepared for you. I thought I did. I didn't have it prepared. And we'll go here to, oops. Come on, Merlin. All right, so that's going to be for Wednesday, and here we go. So you've got Disney. This is the real big name for tomorrow. Other than that, you've got some I guess, kind of big ones. Take-Two Interactive. You have Teva Pharmaceuticals, Under Armour, but Under Armour is pretty darn small and not going to be very impactful. So those are your major ones. Disney, Take-Two Interactive, Teva Pharmaceuticals will be the big stuff for tomorrow. Yeah, Jerome Powell is speaking again, Oliver. He loves to talk. He's probably getting paid for all these presentations. Did I see an advanced chart on Robinhood? Let me check that. I didn't look, but review. Yeah, good. Okay, sign it. So that's the chart. That's just your chart. That's not to trade off of. All right, they're just going to give me that price chart there. Okay, great. Now how do I get out of here? Yeah, the price is going to still stay. Oops, sorry, I didn't show you. The price is still going to stay the same. So if you click on advanced here, it just brings up a chart that allows you to do a more visual. No big deal. It's really kind of silly, but there is no. It's one stop trading application there. So, Mary, when you bring your credit card, travel friend. You know what? Let me reach out to him after the show. He's actually going to Thailand for like 6 months or something, and I've been meaning to get him on. I'm like, okay, I got to bring him on. Let's see. Oh, Chio says, back in 2017, I bought a small portion of Bitcoin, but somehow I sent to Bitcoin, and now I can see it in block view. How do you send it back to Coinbase? Where did you send it to, Chio? That's the key. If you own the location that you sent the Bitcoin to, then you can move it wherever you want. If like I have my Nano Ledger, if I send it to my Ledger, as long as I have my private keys, I can now send it from my Ledger. But you said, oh, you mean to BlockFi? You said I can see it in block view. I'm not sure what you mean by block view. That's why we SPY will struggle. Hopefully, we'll see. Let's see. Well, let me know, Chio. You can email me because I'm going to wrap things up here. I got to go. I got a presentation I got to give here this evening on cryptocurrency and digital assets. So if you want me to help you out with that, Chio, email me at TraderMerlin@gmail.com. Of course, as I mentioned, I don't have any guests Wednesday, Thursday, or Friday, so feel free to type them on in and email me at TraderMerlin@gmail.com or put your comments down below any of my YouTube videos. Jarrell says, did Ledger get hacked? No, Ledger didn't get hacked. Ledger did something fishy with what they're doing to the upgrade. Maybe I'll talk about that a little bit on tomorrow's show. If you upgrade to the latest software, people are worried that it could get hacked, but I'm pretty sure you're going to be safe with that one. Anyway, that's going to do it for me, everybody. Happy trading tomorrow. Let's hope for more downside movement in oil so I can sell some puts against that and get a better rate of return on those puts on XLE. That's it for me. I will see you guys tomorrow. We did not go an hour show. 15 minutes is good enough. Take care.